Yo, yo, yo. Alright. So, pretty decent losing day today. It's starting to turn out to a rough week, but, you know, I think you learn more from your losers than you do your winners, so I guess I'm just paying tuition this week. So, what I'm going to do is I'm going to explain the trades that I took, and then I'm going to take everything off my chart and then explain what happened today and the bias that I really should have had. But anyway, starting off in the morning, we're bouncing to the upside. I would have much rather seen us sort of come down into this area, which was more like OTE, the range, but we were already all the way up here. We had taken this buy side level. We were kind of hanging around the 1 to 1.5 standard deviation, so that's from this low to this market structure shift here, and you have your whole standard deviation projection. So let's go to the 1 hour. As we were coming up into this area in the morning, I also had this 1 hour fair value gap, just because it was clean. It just looked really obvious, rather than something like this or anything down here. So I had this charted out just to see if we would retrace into here. But to start the morning, we basically sort of chop, ended up selling off into this 1 hour. And if you zoom in onto the 5-minute chart, this is where I ended up taking 2 trades, both losses. So right here in the beginning, you see we have an SMT at these lows. So if you just look, over here, this looks pretty good. So we have an SMT at these lows. ES was more bullish at the time. So the first trade I took, we have this 5-minute fair value gap here. If you zoom into the 1 minute, we also had a clean 1-minute fair value gap as well. I smacked along right in here, stop right by this low, and it got absolutely ran through. So that's always nice when you place your limit orders and they just instantly stop you up. So took that loss, and then right here we sort of formed this little internal SMT. So if you see, right when I got stopped out, we took this low, and if you see, NQ was nowhere near taking that low. So I zoomed in, so we're on the 1 minute. I zoomed in and I took a long right here in this 15-second fair value gap. Stop right around here. I was just targeting this internal high. And so we come up, and then eventually end up failing, stopping me out. So the bad thing about this trade, so in my opinion this is bad because I just smacked along, and I think that's just, I don't know, they work, when the model is correct, but I feel like anytime I just smack along in a fair value gap, I just lose. And I pretty much lose like all the time when I trade ES, or in this case MES. I don't know why. I generally like to go on these like low time frames, like the 15 and the 30 second, and try to like look, inside of this 5 minute, like where can I long here to give me, a good setup. But on ES, the 15-second chart is disgusting. It just looks horrible. It's like really crappy to trade on that lower time frame. So I mean, I should have definitely waited to see the reaction here, I think, because clearly if I just didn't have a limit order, like we just went straight line right through, like I would have never taken this trade. We didn't even like wick off of it. It just straight lined through the whole thing. So, you know, that was just an unnecessary loss. But I only took one MES contract. Normally I would trade 2 contracts because that's a little bit more equivalent to one MNQ contract. But, you know, again, I didn't think it was perfect since I was just smacking along in here. So I didn't want to take 2 contracts. Thankfully I didn't. But got stopped out here. The reason why this is bad is because there was no sort of like, we didn't take any low, right? We had these lows that were intact, and I basically just smacked along here again just because I saw an SMT here, and we had like come into OTE of this range. Like, it's not bad, okay? It's not bad in my opinion, because we had the SMT at these lows, right? We took this internal low here, then we had a clear market structure shift, right? Then we come down to OTE of this range. You have this 1 minute fair value gap that we're bouncing off of. Let me delete that 5. Then you zoom in. You know, that doesn't look bad. SMT there, and then you know, take a long. I don't think this is bad. But I should have only had 1 loss, not 2, right? And especially since this is the same, you know, I'm trading the same fair value gap, the same time. Like, that's technically over leveraging, right? I might as well have just taken 2 NQ contracts, right? It would have been the same thing. And I wouldn't take 2 NQ contracts. So to be taking 2 longs on the same setup, that's over leveraging. So I shouldn't have done that. Now, before I go any further, I'm going to explain why this didn't work. At least, well, I'm no expert, but from the studying that I've done on ICT concepts, I think I know why this didn't work. There's a few reasons. So this looks good, right? Like, even on a 5, it looks pretty good. You had the SMT, displacement, 5 minute fair value gap. You're holding this 1 hour. But let's zoom out. Let's zoom out a little. Over here, what I have is the Fibonacci retracements of this higher time frame range to the downside, right? So you see, we tapped the 50% retracement, so we came into discount. I like to call it discount, but I guess it's technically called the premium of the range, which is, you know, where you would want to see shorts start to happen. So we start to reject at the premium of that range, and if we're looking at this range, we hadn't come down to discount of this range yet. This 1 hour is not in discount of the range, but it doesn't stop there. Let's zoom in a little bit more. Alright, so now what do we see? We got Asia high and low. Asia low gets taken. Asia high gets taken. We come up, and then New York takes the London high. You know, we're holding the 1 to 1.5 standard deviation. We come into the premium or the discount, whichever makes more sense to you, of the higher time frame range, and we start to reject. And we have London low right here. So the reason why I think this trade was bad is because I'm almost positive this is the seek and destroy model, where London session takes liquidity from Asia low and high, And then New York session takes London high and low. That's the seek and destroy model. It's not the cleanest because, I guess like this is like right after Asia session ended. We took this low, right, and then took the high. But I do still think this is the seek and destroy model, even if it isn't. This 1 hour fair value gap was not in discount. This is discount, which actually perfectly lines up with the London low. And then there's also like a 15-minute fair value gap in here, like very small, but this is the first discounted fair value gap, and we just completely bounce off of that to spark buy side of the curve. So what did I do wrong? I took a long when we were not in discount of the previous leg higher, and I was basically longing against the seek and destroy model, where the liquidity that it was targeting in the model was below my stop loss. So that was me setting myself up for failure. Anyway, once we take London low, we technically still hold this 1 hour. But staying on the 15-minute, let's zoom out a bit, right? 15-minute fair value gap. Come up, tap it, bounce. There really wasn't any internal model here. We just kind of came all the way down and then bounced. At least for me, I don't really have a clear understanding of what's going on here. So let's stay zoomed out for a sec. This is also your unicorn setup. So this is the 15-minute breaker here. So right, we had a low, we bounce, then we take liquidity, and then we bounce all the way through. So the last up closed candle before we take the liquidity and then bounce to the upside, that's your breaker right there. And then the unicorn setup is just the breaker fair value gap. So this is your 15-minute unicorn. Alright. So right after lunch, so we're not trading during lunch hour, this whole thing happens. Then after lunch, it's not 1:30 yet, but we come up, we ended up taking the lunch high, taking this swing high before rejecting back lower. And then here is where the best setup presented itself. We're in this 15-minute fair value gap still, huge breaker that we're still holding. We come down, we take this low. If you zoom in even further onto a 15-second, take that low, bounce, take another low, displacement to the upside, right? Then what do we have? Clear shift in market structure on the smaller time frame. We bounce, and you could have just smacked along right in here. Stop below the low, targeting the internal high, this external high that we made in the morning, and also this buy side level. The reason why you would be able to target that is because that lines up with your 2 to 2.5 standard deviation. So this is the actual external draw. And I was looking at this 1 minute, staring at it with my finger on the buy button, and I'm just looking. We also had this 30-second here, right? 30-second here. If you look at the 1 minute order block, I mean, look at this, right? if you look at the fib, you know, you're in OTE of this range. I remember I'm staring at this thing. This is the 1 minute right here. And I'm just like, wow, I really, really want to take this trade. This looks beautiful. But I'm down $53 on the day. You know, this is a 15-point stop. Let's say I go on the 30-second. You know, even here, your stops, you know, at least here. You know, I'm risking almost another $30. I can't dig myself an $80 hole. I'm already down $50. You know, $80 is like the size of like one of my, you know, decent winning trades. You know, I'd say that's like the size of my normal winner. You know, I can't dig myself that deep on just some random day, right? I can't take this trade. I'm not allowed to. And it's just very unfortunate, you know, taking those losses in the morning, especially the ES one. You know, that was just unnecessary. If I only had one loss, I was only down, you know, $20-30 on the day, I'd probably take this trade. You know, you come down just into OTE the range, you have this 30-second, you bounce off of it, you're holding this 30-second, holding the 1 minute, which is right here, order block, you know, zooming in. There really wasn't much of an entry, but like on a smaller fair value gap, but you definitely could have, you know, right as we claimed above this inverse, right, we just ripped right through this fair value gap. You definitely could have taken a long here, right, expecting that this was going to be the low. There were many other ways that you could have played this, right? But, you know, obviously best case scenario is you're longing in discount. There was a bunch of different fair value gaps, but I guess you could have just longed right at the 50% retracement, right? Stop below this low. Would have been a great entry as well. And, you know, if you had multiple contracts, you know, this is one of those scenarios where, you know, maybe, let's say you had 5 contracts, maybe you take one off here at this high, move everything to break even, right? Just to lock in something. Then you go the external high of this price leg, and then you go here, then here, and before you know it, I mean, this is a 120-point move. You know, that's your win of the month right there. That's an insane move, and it wasn't particularly unrealistic either, because, you know, you're overlapping the time frames, right? You know, looking at this, it's pretty obvious that we want to go to this high, right? If you're trading on a 15-minute chart, and then you overlap it down to the 1 minute, so that you're risking 15 points, you know, to ultimately make 120. Now, I would have never left my one contract to this external high. There's no way. But, you know, I probably would have taken off at this high, maybe, or this high, or this high. Definitely nothing more than this high, though. Either way, though, this is a great quick trade to build conviction, and then you can watch it run all the way here to line up with the standard deviation to give you that extra conviction later on down the line when, you know, I'm trading more size. But I am, of course, upset with my performance, but like I was saying earlier, I think, you know, I gotta pay my tuition. I've been trading with real money for 6 months. 6 months. And I'm pretty much teeter-tottering on the break-even, you know. Sometimes I kind of drop below break-even to where I'm just like losing money, and then I'll have a good couple weeks, and then I'm right at break-even again, and I'm just sort of teeter-tottering on break-even. I've only been trading for 6 months with real money, you know. Maybe I shouldn't be so hard on myself, but I'm almost glad that I lost this trade today in the beginning, because I don't know if I said this, but I did see this this model, the seek and destroy model, and I was looking at it saying like, wow, we might go take London low. And the reason why I took a long was because of those SMTs. I thought this meant like, okay, no, we're not going to take London low. This is the buy model, right? But I was wrong. And if you zoom out a bit, you even had a great short opportunity, right? Like if you completely disregarded this 1 hour fair value gap because this is not in discount. So you say, well, we shouldn't respect this because this isn't in discount. You have this 15-minute bearish fair value gap, right? Zoom into the 1. Here's your setup. 1, 2, 3, boom, displacement to the downside. You took all these highs. What do? You retrace perfectly into OTE, into this 1 minute fair value gap. And boom, you take a short, targeting either this low, which is what I probably would have done, or the London low. Great, beautiful trade, happened extremely quickly. And this is where I longed from, by the way. I longed in here, which was just a rebalance to that 1 minute before selling off. And let's say you weren't comfortable just shorting here because, oh, we're bouncing off the 1 hour. I don't know if, we're going higher or lower. Well, then that's when you can zoom into the internal model. You take that high, you respect this 15-second, boom, here's your market structure shift. 15-second fair value gap again. That's where you take your short, stop above this high, same deal. But I was so blinded by my long bias. This looks so obvious. It's like staring you in the face. But I was just really blinded by my long bias here. But regardless, I think this loss has made me gain conviction in the seek and destroy model. So I don't want to make this video too long. We're already over 20 minutes, but losing day. But this week is starting to kind of be pretty poor. I'm not gonna lie. This week is kind of bad. 3 losing days, pretty decent sized losing days. But we're learning, staying in the game, trying to learn. So going into tomorrow, this buy side of the curve is starting to play out. I want to see sort of what happens here in this area. I will be looking to short if the opportunities present themselves in here. But if we, rip through all of these areas, then I'll look to long, expecting that we're going to go to this external level. But, the 4 hour, this is in OTE of this range to the downside. You also have the 2 to 2.5 standard deviation. You have a daily volume imbalance, buy side right here. So this is that daily volume imbalance. So I think this is a pivotal area, right? We either sell off here, which might spark the beginning of, a higher time frame sell model, or we just rip through this area, and end up completing this model. And since the 4 standard deviation also comes close to here, I don't know. This might be sell side of the curve, buy side of the curve to go take out this high. I'm not sure. But I want to see how we react, especially in the overnight. What kind of structure we form going into tomorrow. I'll look to take shorts in here if it looks good. But we'll see. So Hope you made some money. Hope you caught this buy side. And yeah, see you in the next one. Peace.